Hello traders, Gary Wagner here. Just before 10:30 in Honolulu, 4:30 in New York. It is Tuesday, July 12th, 2016, and this is the daily report for gold and silver. Tremendous sell-off in the precious metals markets. Absolutely a risk-on day. Equities going to a new historical high. Gold trading off about $23 on the day. The close, $13.33. The low on today is $13.31 with a high of $13.58. That, of course, is COMEX. When we look at spot, very much the same thing, $13.33. Low on the day, $13.30, and the high, $13.57. It is that low of $13.30, $13.29 that's of particular interest to me, and I'll talk to you about that when we pull up our first chart. And then silver off, but only off about 0.6%, $20.12. High today, $20.52, and the low, $19.97 on the day. So traders, here we are. 12th day of July, tremendous sell-off in the market. And really, the writing was on the wall. We knew that the other day. As I talked about Sunday, as this market came in, and this, of course, is the candle for Sunday and Monday, this first red candle right here. But we did actively break above 1371. 1371, of course, is a one-to-one relationship between what we are calling our wave 3 and our wave 1. That makes them identical in terms of size. Of course, this is our corrective wave 2 here. As the market broke above, that's when I issued the buy signal. But the lack of follow-through really told me, and that's why we exited that trade, took a very small loss, and we realized that the market was going lower, is that this is a critical for resistance level that has to be taken out on a closing basis before we'll see this market go to the next upper level, which is $13.99 and then $14.45 on top of that. So that was pretty clear, and we absolutely went into a sell-off yesterday. And today, what is interesting is if you take a look at this low, I have added a new fib retracement. The fib retracement simply starts at the bottom here at 1253 up to this top at 1377 to give us a range, and then we plot what to me is the critical levels we want to look at, which is a 38% retracement, which comes in at 1328, also matches up with a nice harmonics. We'll talk about that in a second. And then the level below that is roughly 1300 or 1298. That's right here. And that, of course, is a 61% retracement. But lo and behold, if you kind of carry that line across, you'll see where that plays in, because that was the absolute top before the market came down to about 1200 and then began to rally again. Now, here's what I find most fascinating. That number, in other words, 1328, 1329, look at where the low came in today. It roughly really matched that. That's also a 61% extension of wave 1. And realize that our model looked at the fact that wave 3 cannot be the shortest, so it has to be at least a 1-to-1, which takes us to this 1371. And that's why when the market could not take this price point out, it told me we are going to go into a correction. And the key is this: whether it is right here at 1334, which is where the market closed, that this correction ends and we pop back up, or if we have further selling in the market, meaning trading as low as 1300, which is our 61% retracement, and then pops back up. The key is that I believe that once this correction terminates, we will go back into rally mode. Not only that, that rally will take us past 1371 to at least 1399. Traders, here's another interesting way to look at the most current action in gold. Here we're looking at a weekly chart. I've got one master long fib retracement running from 1050 up to 1371. 23% retracement comes in at 1331 and 38% retracement at 1308. The 1308, as you can see, matches these tops here. my sense is, once again, these are the two critical areas that we're looking at. On a weekly chart, this is a massive engulfing bearish. We could easily sell a little bit further. We could easily see, a little bit further in terms of the sell here down to as low as 1,300. But the key and the most important takeaway of today's report is whether it is here or another $30 from here, we will see a bottom and, more importantly, at that bottom, return to a major rally mode. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.